We had Oleg join us from SwapKit. Were your ears burning?
Hey everyone.
Hey, buddy.
Yeah, so I was thanks for having me on.
Yeah.
I was just listening in, and I can maybe share a bit more our perspective and also maybe answer any questions if there are some. In terms of data sharing and transparency, we've already built, we're in the final stages of testing this. It's an accounting system where we already index all of the transactions that we do through THORChain. So what we do now is we also enrich that data with the liquidity fee or the kickback, sorry, that THORChain will be sending back to SwapKit. Let's say we accrue $1,000 or $500. Then our goal will be to spend it all in deeply discounted quotes, where basically we would serve quotes where there is no SwapKit affiliate fee. The goal here is first, so from the perspective of THORChain, of course, THORChain would likely earn more volume, and SwapKit can maybe win more auctions. So THORChain might win more often within SwapKit, but more importantly for us at least is for SwapKit to win against its external competitors. So I see it as if THORChain increases its market share within SwapKit, THORChain is likely to make more money. If SwapKit, if that happens, SwapKit makes the same. Basically, for every dollar that we receive from THORChain, we spend it in, or we don't get one from affiliate revenue. But if SwapKit can then get a bigger market share within the industry, then everyone makes more money. So that I think is just the win-win. And then in terms of transparency, so the current balance or credit pool would be exposed via a public endpoint. And then the database in which we index all of the THORChain transactions with the liquidity fee and each transaction, basically how much it accrued and how much it has spent, because a single transaction can both accrue liquidity kickback and also spend it with having zero affiliate fees. And that we would be willing to share with a few actors. And the reason is just that it requires some setup. It requires a Google account. But yeah, everything would be in BigQuery, and we would be willing to share with Chad, the protocol team, or anyone. So in this way, we think it will be transparent, and we can make sure the system is really, really good, and that, it's very measurable. And my last point would be from the perspective of THORChain. I think the best way for you guys to evaluate this is simply to just take a look at the actual net fee that you earn from SwapKit affiliated transactions and just try to optimize for the biggest number. So if 30% kickback gives you more net revenue than 20%, then just go to 30. And then if you go to 40 and you find that it's like diminishing returns, you might have found the optimal setting for THORChain.
Yep. Do you have a feel where we should start? Like, should we start at 10, slowly inch our way up? Should we start at 20, kind of get something more punchy?
It's really hard for me to say. I think starting at 20% sounds healthy, but really I don't know. What I can share is that oftentimes THORChain or SwapKit so the market is fairly tight where even like 5 bips can make a difference. And in most cases, SwapKit will charge between 5 and 10 bips, depending on the integration. So if we can reduce the fee by 10 bips, removing completely the SwapKit affiliate fee, then there are good chances that we can win that. Regardless of what is the kickback, we would aim to do deeply discounted quote. The more kickback probably just means that we would be able to do that and offer that more often. And then even what's really cool about the system is even if we serve a quote where SwapKit earns zero affiliate fee, we still earn the kickback fee. So we could go into a world where SwapKit just stops charging any affiliate fee for any THORChain quote because the system just feeds itself. Like the system doesn't require SwapKit to charge affiliate fee for the system to work.
Yeah. I like it.
So let me ask this question out of curiosity. Like, when you got, a quote that's being made and you're trying to determine between, like you don't know what the other quotes are, like that you're competing against, like whether it be, I don't know, layer zero, something, or, some other, interface. Or aggregator rather. So it's hard for you to know that information. So are you experimenting to figure out what that information is, and so that you can take some of their volume, or how are you thinking about that?
Yeah, of course. So what we often do right now is, let's say we receive a quote request for zero point 0.1 BTC to USDT. And we receive the quote request, but we never receive a swap request. In certain integration, we still have the source address and the destination address. So what we do is we check that source address on chain and we see, okay, in the next 5 or 10 minutes, is there a transaction that matches exactly the quote for which we received something, but we didn't win the auction? And then we measure the actual execution. So we can sort of see what the others are quoting this way. We also have some automatic monitoring. We have access to some data. I can't share everything here, but yeah, this is something that we're very, very active on. The challenge in our industry is that if SwapKit is to take too drastic action without talking to the wallets and the integrators themselves, we will just end up losing if the other aggregators don't follow suit in being more tight with evaluating the difference between quoted and executed. So we're actually trying to work a lot with wallets and give them all the tools and all the information and everything that we've learned looking at this problem so that they can implement what fits their business goals best. Execution is one thing, but then there's also, or price execution is one thing, but there's also the refund rate, the number of time transactions go wrong, the latency or the time to complete the transaction. So price execution is not the only metric that we look at. We really just try to quantify and measure everything that we can, and then each wall will have different priorities. A lot of the partners or the integrations in the APAC region, they just care about, I want the transaction to go through as soon as possible. They don't really care, or they're very much less sensitive about the fee or the price. But other wallets, they want to get the best price and get exactly what they were quoted. So we're just basically working with any wallet to match what they need.
Yep.
When you look at the on-chain data, you're looking at the execution prices, right? Or does it actually show you what was quoted for that transaction?
Oh yeah, of course. We track all of that.
But you can see it. Oh, okay. So when other providers are providing quotes, or Ledger, for example, deciding on how to display the quotes, like, do they add in the fee and the spread into the quote, or is it like separate? Like, could maybe different platforms are going to have different spreads, and then you might have one spread coming in cheap, but they have a much higher fee, and then the user gets charged that higher fee afterwards, ends up paying actually more in the end. Or are they pretty good about combining the fees and the spread into one quote?
Yeah, they really rank the quote in what it is expected to output, what would be the net outcome delivered to the destination address. And that's mostly what they measure. So fee, spread, call it whatever you want. They really just look at the outcome.
It's just all combined. It's all aggregated. So, okay.
Correct.
Yeah. Okay,
so
yeah.
With the bigger wallets, they will tell us, hey, this is how you have to report the fees. So we don't have flexibility. And this is where SwapKit, as an aggregator, we can pick and make all of the providers look the same. So Ledgers has a specific a spec, and they get to dictate how the fees are reported. And we just make sure that all of the providers comply within the structure that they want.
Well, it's pretty cool. If it's only 5 basis points difference between winning or losing a quote, like, we should be able to compete, right? And with this rev share. At least notice something, right? Like, it should be.
Yeah, and by the way, it's in like their best interest, them being SwapKits, for us to be successful here. Because if we're not successful here, then we're going to be turning it off, and I know Oleg's not going to like that much, right? So he wants to make sure that it's beneficial for SwapKit, but he also needs to make sure that it's beneficial for us. Yeah. It's a mutually beneficial, symbiotic relationship in some sense. So Oleg, I have a question for you. Like, I'm curious, like, what is the heuristic you guys might be using to like decide? How did you decide when to spend from this bucket of money to reduce your affiliate code or affiliate fee, whatever, and when you not? Like, how do you decide that?
So for now, it would be very naive, and we would just try to aim to spend as much as possible, as fast as possible. So on the data ingestion, we would probably have a 5-minute delay, and really the system, we don't need to aim for true zero. Like, it doesn't need to be a perfect balance. SwapKit can owe THORChain $100 for a couple of minutes. THORChain can owe SwapKit a couple of dollars for a couple of minutes. It doesn't really matter, so long as we just try and average around zero. So to begin with, it would be very naive, but then If this works, then of course we would invest more resources because we would be incentivized to strategize around this to try and is it better to let the credits accumulate a bit more and spend them all when the market is volatile? Is that where it's more profitable to do so? We would have to experiment and invest more resource. For now, it's really just simple. The only caveat that I raise is in the proposal is some commercial agreements don't let us choose or change our fee. The fees are set by the wallet and they are the same for everyone, and we don't have anything. So we don't have any flexibility. So what we do in those cases is there will be some integrations in which THORChain would only accrue, and then some integrations where we would accrue and spend, and we would aim to spend as much as possible. But because I can say that, but within Ledger, we have that flexibility, and Ledger is basically an infinite market. We don't fear that we would end up just accruing and not being able to spend them, just because Ledger is so big of a market that we'll always be able to spend anything that we accrue with all other integrations.
Yeah.
Could you organize it based on swap size? Because where THORChain tends to win is on the larger swaps, right? And so we don't need to subsidize those trades because we're already getting them. I think we tend to lose out on the smaller size, right? So could you focus the spend on the lower swap sizes to help us try and win those, or would you just be, like you said, it's going to be very simple and basic at first. It's going to kind of apply it to everything evenly.
So what you suggest is definitely the kind of thing that we would look for. We would try to optimize for size and trading pairs. There are some trading pairs that THORChain is just naturally better. Unfortunately, so THORChain used to win all of the big quotes. With the solver market and how it evolved over the past year, I don't have strong numbers right now in front of me, but generally I would say that up to $1 million, the solver-based protocols are generally pretty good. So anything above that, yes, THORChain wins, but then the bulk of the volume is still within $100K to $1 million for the retail market. Yeah. So we would probably still need to incentivize the larger swaps so that THORChain can win some of them.
Yep.
Okay. Cool.
I mean, you could do a thing where if you have, say you have THORChain, Near, and Shapelet, these are all your partners, swap providers, and one's offering 10 bits, one's offering 12 bips, and THORChain's offering 13 bips, and you could bring the 13 down to 9 theoretically, right? With this, and rather than the maximum 7 bips down or 10 bips down, whatever your fee is, you could just bring it down by 4 bips, because by that you now have a better price than what you did a moment ago, and now you're more competitive with all your competitors that are kind of to your sides. Is that one additional basis point lower than what you had a moment ago good enough? I mean, it's good enough for you, for us, from our perspective, because we're now your top swapper in that scenario, but maybe you need to do 2 bips or 3 bips further in order to get the kind of more volume from your people that are lateral to you, in a matter of speaking. Does that make sense? Instead of just doing the maximum 7 bips, the maximum 10 bips, where the number is all the time, you can do halfway, just because that's going to give you a better price than everybody else. And if you actually are monitoring the execution of everybody else, your competitors, then you can probably even calculate to some degree how many bips down you need to go.
Yep. No, of course. So again, we just want to test out the system, see if it works, and see if it's worth it for us to invest more engineering resources to get it more sophisticated. But of course, our incentives are perfectly aligned. So yeah, I mean, at some point we might even ask THORChain, hey, can you guys do this? Or can you, what do you think about that? So we would definitely be collaborative because we just have our incentives are perfectly aligned.
Yeah. Okay.
And one thing on quote competitiveness, we recently announced it, and it's really, really cool to see. THORChain's design for Tron swaps is really, really good. So we recently activated Trust Wallet to use Tron via THORChain. And the reason why it's really good is that most of the solver-based protocols, they have unique deposit channels, or deposit channels that don't get reused quite a bit. With Tron, there's a significant activation fee. So whereas because THORChain shares the same addresses, so the inbound addresses, and reuse them heavily, and they change every time there's a churn, which these days is not very often. Well, basically that just means that there's no activation fee paid by the users. So this is a really, really successful activation, and probably the other like CIC, Changely, Change Hero, all of those other ones, they usually use unique deposit addresses as well. So those are swaps that maybe we won't need to incentivize because THORChain's design is just more compatible or competitive with the chain it's trading on.
Yeah. Yeah, that makes sense. Yeah. I mean, this all sounds very again, you don't need to sell me. You and I think see similarly on this topic, and are both pretty excited about the potentials of this, and it makes a lot of sense for both of us. And which is why I'm excited to give it a go. And we just need to get that last 10% of nodes to approve the ADR before we can move forward. And once we do, we'll flip you on, and we can start the experimentation and see how effective this tool is as a way of generating more revenue and more volume for both of us.
Of course. And if any nodes have any suggestions, ideas, or questions, just ping me or ping us in either the Telegram chat or the Discord chat. We're really open to feedback and explaining stuff deeper if it's required to get some more votes.
Yeah. Appreciate it.
Yeah. Oleg, would you agree that when we do this, we should know pretty quickly, like within a few weeks, a month, whether it's working or not?
Yeah, I would think so. We have enough volume when all chains are enabled that, I think the validation period would be as quick as a few weeks.
Cool.
Yep. Let me ask you, Oleg, on a different topic. Are you guys interested in the dynamic fee model that we're currently experimenting with Shapeshift at the current moment, but we're going to be expanding to more in the near future? Is that something that you guys are interested in, or do you think that's just not a good fit for your use case?
Remind me, the dynamic fee, is it the thing per trading pair?
Yes, per trading pair, the protocol changes the fee from up or down a number, and then it goes up or down relative to what generates more volume for the protocol versus not, on a per affiliate, per trading pair level.
Yeah, I mean, do you mainly go up or down the liquidity fee of THORChain?
It's on day one, it starts at like a 1 BIP, right? Which is actually 2 BIP because of double trades, or maybe, yeah. But it goes up and it increases until it finds a spot where it feels that is the most revenue, and then it tries to go down and tries to go up, and kind of probably just bounce around depending upon the scenario of like how much the volume changes, so the revenue changes, and so it should just find the optimal place that generates the most amount of revenue in theory for this affiliate on this trading pair.
Okay. I would say I'm definitely more interested in the liquidity fee kickback program than this dynamic fee. Definitely worth trying. I would definitely just try those two in isolation if possible, just so that it's easier to measure the results. So I'm really keen to get started on liquidity fee if that gets voted on. And after a few months, once we've established what works, what doesn't work, then maybe we can start taking a look at this dynamic.
Yeah. I mean, for me, I was considering putting you guys into this program maybe last, just because you're one of our biggest, affiliates, and I wanted to slow roll this out, and over time rather than like starting big, starting small and working way up. But I was just curious if that's something that's interesting, but I can understand why the rev share model is more interesting for your perspective, because you have more control over that and you can utilize it to optimize your own scenario rather than, letting us kind of figure out on the protocol level. And like I said earlier in the pod today, that like what you guys are doing effectively is dynamic fee, right? You're deciding how much fee you want to charge based upon some data or some information, and we're doing the same thing on the protocol level. But because you're closer to the edge, you could just have more real-time information that is more, that is more usable. For us, we have to figure out from the volume of an entire day, which there are lots of different things that can push that volume up or down outside of the feature itself. And so it's harder to get more signal and less noise from our perspective. But for you as an affiliate, you have more information and data to operate off. And so you should be able to have more effectiveness with this, I would argue.
Yeah. But what you're describing is still something that basically you would add the SwapKit affiliate, the Tor name, into the system. It's not something that we can decide per quote with a quote param, correct?
Yes. Well, you can on a quote param in the sense that like when you hit the quote API, you have to give your affiliate which might be, like for Kenton, it'd be like STO, for example. For you guys, I think it's like underscore dash or something, right? And you can have a different one for a different purpose, and it would just quote differently. It all
I see.
depends upon the affiliate you're putting into the quote to tell you what the protocol would actually charge for this swap, because you're going through this affiliate on this trading pair, what you're going to actually pay. Oh, 5 bips, 10 bips, 2 bips, 20 bips, whatever it is.
Okay, interesting. Yeah, let's take a look after the liquidity kickback thing.
Yeah. I'm more interested for you guys, especially because of this whole kind of like deal we've been talking about. I think it's a better use case of capital, in my opinion. But maybe for other partners, who don't want to utilize this feature, because they can't, because as you said earlier, like I think maybe Trust Wallet might be an example where you have to take 7 bips. It doesn't mean you can't get dynamic fee for that one, and they get better fees. You still get your 7 bips on every trade as you're kind of obligated by contract or whatever it is. But they get a better price at the end of the day, and we get more volume because of it.
Great. One small thing while we're talking business here, is there any capacity, or can you think of a way where we SwapKit can report where we think, where we see the most opportunities for THORChain to add liquidity to specific pools? So I want to give you 2 things. So first, there are more and more integrators that are telling SwapKit, hey, we will start looking into time of execution. So with the streaming swaps, if the pool is shallower, that just means that the time to execution will be probably slower. So that means that THORChain might get deranked. If they're looking at time of execution. What's even worse for us is we will have to care a lot about this, because in some integrations, SwapKit is kind of bundled up together. So if we see that, for example, Near can deliver this swap in 5 minutes, but then it would stream 30 minutes on THORChain, even if the pricing is good on THORChain, we might not be able to use it, because overall, we have to consider time of execution. The other thing that I shared with you also is some APAC partners, we have a quote param that is called max execution time. So our integrators can tell us how many minutes they can tolerate for a swap of a specific size. So some integrators use this, and the most commonly used value is 30 minutes. So if the THORChain quote was to take more than 30 minutes, we just don't return it. So that disqualifies sometimes THORChain. I'm not saying this is a huge revenue driver, but in that spirit, I feel like there's a lot of information that we can share, but it's probably useless for us to share it if THORChain can't action on it. But if there's some flexibility on how the POL gets attributed and shifted between pools, there could be some potential for optimization there.
Yeah, so there's a couple of components to this. So there's been talk for a while, and we've been trying to work on this. And I think with 3.20, there's fixing a bug going from economic to operational mirror, so that we can start taking some percentage of the system income, let's just call it 20% for the sake of discussion, and then we deployed into various pools. How that's determined is basically looking at the depth of the pool relative to the revenue it generates. So ones that have a high revenue relative to its depth, that's the market telling the protocol this is a good place to deploy more capital. It's not something that I decide or the developers decide, and kind of like fine tune it by humans. It is algorithmically determined in that context. I would suspect that shallower pools like a Solana pool, for example, or maybe some of the Tron pools would be quick to get the liquidity first, because they're so shallow that you don't need a lot of revenue to be a high revenue to relative to depth in those cases, versus Bitcoin, which is like obviously like the deepest pool. It would take a lot of revenue, a lot of swap volume to equal something in a smaller pool. So I think the smaller pools will naturally get focused on first, like Tron and Solana and Monero maybe, and whatever else. Addition to that, like we did just move the rapid swaps down to 3, or up to 3 rather. We can increase that number to some arbitrary number. Like you could throw it to 100 if you wanted to. It could go pretty high. I want to be careful about that. I don't want to like rush into that too much, and especially with the block time issues that we were having earlier this week and last week, I didn't want to put more into the block, right? I just wanted the kind of things to settle first. So we will probably be shifting that up to 5 at some point in the next week or 2, I suspect, which will again like drop down our speed. Not to mention that we also have in 3.21 zero conf trading where specifically from Bitcoin, we'd start doing the trade as soon as we see the mempool instead of seeing it like on chain, and we don't send out the funds until it gets on chain. And so that we can kind of get rid of that like 10-minute wait time that Bitcoin has. Technically it would work for other like Doge or whatever, but like it wouldn't be as much value there. But if there are issues that you're seeing, like I would beg and plead you to let me know. The more information I get from you, about, this is what I need to see from THORChain, to get more volume. I need this to be faster. I need this to be cheaper. I need this pair to be this. The more info I get from you guys, the more informed I am, the more informed that I am, the more actions that I can take to better our situation, to better suit your needs. So definitely let me know what you're hearing from your clients or partnerships, whatever, and I will do whatever I reasonably can to meet that ask.
Hey, can I add something too? So Chad, I don't know if you remember, but Boone put together an ADR about rebalancing the Treasury's LP positions.
Yeah, that's right. Yeah.
There's a lot of positions that there's just dead money, right? There's no volume in those pools. So Oleg, to answer your question, I worked with Boone a little bit on this. We just kind of arbitrarily came up with how to rebalance it. But there's like some specific pools where you're like, guys, you got to get this from like 50 grand to 250 grand depth. Let us know. And then maybe those are the pools we prioritize to reshuffle the Treasury's LP positions into those pools. Yeah.
Yeah, that's true too. I had forgotten about that. That's another thing that's been on our backlog for a little while. I think for that though, we need to like the Treasury's LP positions are actually like frozen, right? That you can't withdraw them for security reasons, and we don't really have a general interest in withdrawing anyway. But for purpose of redistribution, that does make sense. And so we have to like migrate all the LP units from the old Treasury address to the new Treasury address, and then we can do withdrawals. And once we have the withdrawals, we can, send back into a different pool.
Are you talking, Oleg? You're muted, buddy.
Nope, I was just in agreement.
Nodding in agreement.
So one thing I think we can share is, and it would be a pretty easy exercise, is we just rank the pools by depth on THORChain, and then I can rank the assets or chains for which we see the most quote volume, and then just try and see the outliers. So I see like Bitcoin Cash is among like the biggest pools still on THORChain. So is Doge and AVAX. So probably AVAX and Bitcoin Cash, really, a lot of this capital can be reallocated to Sol and Tron, and it's going to see a lot more volume.
Exactly. Yeah, exactly.
Yeah.
No.
Yeah. Okay. Just send me DMs with this information, and I'll be happy to work with you and see the changes made as reasonably fast as I can.
I'm guessing it's the stablecoin pools we really need to beef up. I think about this a lot, especially the Tron USDT pool. I think is pretty small, and like
probably
because like our biggest trading pairs are like Bitcoin to ETH, right? Because those pools are huge, right? It's like I think Bitcoin's 20 some million and ETH is 15 million or something. But like I think our Tether pool is only like 3 million, maybe 5, and USDC is only a couple million. Like, and then it really tapers off. And so I can't help but think if our stablecoin pools were closer in size to Bitcoin and ETH, we'd see a lot more of those ETH to stables, Bitcoin to stable trades. So I think medium term would be a good goal for us is to get all our stablecoin pools beefed up pretty good.
Yeah.
Yeah.
Honestly, I'm willing to bet the algo that we have right now will probably work pretty good for what you're asking for. Like it'll probably be fairly aligned with what your needs are. I'm willing to bet, but maybe I'm wrong. We'll find out with time.
All right. Well, thanks for having me on. I'll jump back into listener mode.
Really glad you came, Oleg. Thank you. Appreciate it.
Thanks for joining us.
That was
Awesome,
that was great, man. Thank you so much.
Have a good one.
You
Thanks.
too, man.